out there, but I really like the fact that why do we only look at risk registers? Yeah, let's start looking at opportunities registers as well. But I think as he finalized his presentation, long-term view, sustainability, that's the only thing that will ensure that these financial statements, these financial institutions continue to survive for a long term. But I think maybe just to add, because we were looking at measures that were taken by, the Reserve Bank of Zimbabwe, I think similar measures were actually taken by the Bank of Tanzania during the COVID-19 pandemic. And maybe just to mention a few, the Bank of Tanzania here also, really adopted a number of relief measures that helped to cushion the economy, but also to support the banking sector in Tanzania. They reduced the statutory minimum reserve ratio, but also they reduced the discount rate. They reduced the haircuts for borrowing using government securities, but also there were quite a number of regulatory flexibility, particularly on restructuring loans and facilities for borrowers that were facing challenges during the pandemic. And I would say that the governor is here, the banking supervision teams are here. These measures really helped the banking sector in Tanzania. I think when the global revenues for the banking sector were declining, actually the revenues for the banks in Tanzania were growing, double digits, both in 2020 but also in 2021. So I think a round of applause for the Bank of Tanzania. That was, brilliant work.
I'll try to be within 5 minutes, even as I know some have exceeded a bit. The beauty with what I was presenting is that it's been chopped piece by piece since morning when Makamu wa Rais was presenting. And so it's leaving me with, now I'm going to cherry pick what I wanted to speak so that I don't appear repetitive when it comes to the audience. And I think in terms of the question and how we organize, I look at it from multiple fronts. For instance, we really need to understand the nature of this crisis we are talking about, because in a way there are, in my view, two types of what we talk when we look at what is happening in the banking sector. For example, when you have a situation where there is the sector or the economy is solvent, then we really don't term that as a financial crisis. That is actually a financial disruption. And I think when you have that situation and you are dealing in a banking sector, it's only panic which make us not to deliver what we are supposed to deliver. Because if you have a bank, for instance, struggling with some liquidity here and there and can access liquidity from the central bank, you can really not start talking about crisis. That one we term as a financial disruption. And clearly even what is happening on FX today in our markets across emerging markets is exactly that. Now, a financial crisis is when you have a situation where the sector is insolvent and it becomes really difficult to even know what is happening tomorrow. And that takes me to my next question, which now says, how do you deal with that in multiple setups or economies? If you look on that situation, if you have a developed economy, the typical economies, the AAA rated ones, that crisis is easy to maneuver around. And I'm not saying easy in the context of absolute easiness, but it becomes easier to manipulate as opposed to the others which I'm going to mention. So if, for instance, today you have a crisis in the likes of the US and co, you would see, because of the transparency, the ability to, the development, the level of their stock markets, and various other markets that are easy to, there is ways to maneuver around. But if you go to the second category, which is now the emerging market countries, Latin America, part of Asia, and Africa, it becomes more difficult because you are now faced with a situation where there is a crisis and everyone is trying to get away. And you can get examples of, you look at these economies even now, you look at Nigeria, currency depreciated 70%. Look at Argentina, peso 50%. Look at our neighbor Kenya, over 30%. And it's not yet really a fully crisis, like find. But it's because also of the ability, which Professor said, about how our markets are able to absorb shocks. For example, our stock markets, if you look at the capital flight, and this question of capital flight when it comes to develop these emerging markets is a huge problem. There is no way you can talk about limiting. Of course, you can limit, we noted that during the Asian crisis, Malaysia did that, and ration and decide to take those kind of actions, but they actually did. But then the third one comes into planned economy. When you have a crisis on the centralized economies, that is what you don't see. I think you would hear very few talking about crisis in China. You see the property market in China is going haywire, left, right, and center, the largest one collapse. But because of the inefficiencies, and I'm not saying efficiency here, because the government sector gets support on deposits and liquidity and all that, and the transparency is not clear, then you have that typical arrangement. But then now that takes me down to what happens during crisis time, so that we can now figure out what can we do now as banks, and how do we navigate that to make sure that we continue to survive and continue to do our roles as banks. And you see, during crisis, what normally happens is panic. And when there is panic, then greed fits in. When greed fits in, then you have issues like bank runs. Depositors and bank runs, you categorize it into two. You have depositors rushing to pick their deposits, and you have those lenders who have given open lines coming quickly to utilize those lines because they don't know what is going to happen tomorrow. So you have double crisis. Depositors chasing their money out, and then those borrowers who you have given money coming now to utilize those lines. And there is absolutely no way, even as big as you be as a bank, to sustain that pressure. And all of us know what happened to Washington Mutual. That was the largest failure in history. We're talking about 307 billion US dollar size of a balance sheet. That is 800 trillion TZS. And within 10 days, depositors withdrew 17 billion. Now, even if you have, what do you do to have someone who is taking 17 billion? So later I'll talk about now how we are going to organize, because even when they take that money out from this one entity, it's not going anywhere. It's going to another entity. So it's moving from A to B. So someone who is being hit by 17 billion, there is another one who is getting 17 billion. So how are we going to organize to ensure that we harmonize that? And that comes to that point of making sure that we ensure that we restore back what we call stability in terms of confidence. Because what we normally say in banking is that when the banks cannot do their jobs right, and the Vice President said in the morning, if we don't do our things right and monitor our borrowers correctly, depositors will monitor the banks. And that's what you would see. If you are not doing your right stuff, then you have challenges on lending. You start to have your own problems. Depositor monitors you by doing the right thing, taking their funds out. And that's why you see during crises, if you see like the 2008 crisis, lending went down by 47% across, and I'm talking about big economies. But Madam Ruth talked about measures we took during COVID. And if you look at the European Union, large banks, actually there were some positivities from the crisis, in that non-performing loans reduced from around 5% to close to 3%. So that takes me to that issue I was trying to say earlier, that what do we now have to do to navigate a situation like this? And whereas there is really no one medicine into this, and I don't think there will be a book which will tell you, because of the different market bases and economies, someone to tell you if you get this, then you can do this, and then you can get out. Some of them are not conventional. You can actually, it's hard work. It comes, we sit. So one is that we have to make sure that we communicate enough ahead of time. Don't hide. And sometimes when you have a crisis, even as a bank, and we run these banks, you will go in that phase of denial, thinking things will go away. And if you read history after the Silicon Valley Bank collapse, today you will hear blames about, they didn't say it on time. Banks, first, if there is a challenge, the first medicine is to be transparent, because depositors who are now expected to be monitoring us if we are not doing our right things, they are the ones who decide whether we survive or not. So giving them information ahead of time and consistently communicating is one of the solutions. But again, another item which as banks in situations like this we need to do is to do selective lending. Not all sectors will be affected by a crisis on an equal manner. Even when you look at COVID, there were sectors which were doing very well and some were not doing well. So there is that question of figuring out which sectors we should continue to support during crisis. And those sectors, if we extend and increase credit, they now would make us continue to make money, and in that way even lower our NPLs for those who are not doing well. And at the same time, they will give us now time for us to maneuver around the crisis. So selective lending is one of them. But again, there is how do you diversify the portfolio? And I think we're talking about credit modeling and all those kind of things. We need to be in a position where we can now say, look, this is a crisis. How can we diversify to sectors which will help us to continue to improve? And in doing that, then you can now also be able to have multiple areas you lend. Because one thing is, if you have a crisis and you stop, say for example, completely lending, you can actually increase, create challenges and exacerbate the crisis. In that those borrowers who are supposed to get, say, working capital, if you don't give them the default, they become NPL, and then your capital still is going. There is a thin line between continuing to lend for the good sectors in a diversified manner versus stopping altogether.
Finalize now, please.
Now, Madam, I'm going to that. And now the final one, which is kind of summarizing, is that we will require a complete, honest and working relationship between the multiple sectors. We will have the regulator on one side, and regulator, we talked about it. We will have the banks, which are the financial institutions, including the insurance companies and all the financial sector. We will have the customers who are going to agree with us that if we collapse, they will also fall with us, so they have to be with us. And then we'll have the government. In times we talk about, and I'm happy some of the parliamentarians are here, we talk about private sector. Private sector allocate funding or support to areas where they see benefits. They're not going to be there to say, kuna ujamaa, no. They will come when they see there is value. So there is an area where the policymakers should clearly chip in and take charge. And you see Credit Suisse. If you read, I think probably if you read news, you will know that few months before the takeover by UBA, the government was already planning to take it down. But there were some arguments, you cannot take private sector, blah, blah, blah. So we are saying that in specific conditions or situations, the government should chip in and do the right thing. The US did that when they guaranteed the depositors of Silicon Valley and Co. They took off Fannie Mae, Fred Mac, nationalized. And so that is an area also which we need to work clearly to ensure that we now support the system, because the interest here is the system. If we can revive the system, create confidence, I think we'll be out of woods, please. And things will go. Thank you, madam.
Thank you very much. Yeah. I think Mr. Cosmas talked about, being selective. Yeah. The question is, how best can we organize to finance economic activities during crisis? I think he talked about being selective, and I think for me, I would say, in particular crisis period, I think we need to be very, very strategic in terms of how do we distribute the lending activities, yeah, inclusive and high impactful sectors. So, for example, agriculture, industries, and all that. And I think you talked about the government chipping in. And the Bank of Tanzania is here. We know that during COVID, actually the Bank of Tanzania introduced a special agri-fund of 1 trillion, whereby banks actually can borrow at 3% and on land with rates that are below 10%. So I think these are the some of the mechanisms that the Bank of Tanzania helped us very much. But I think the other question that we should be asking ourselves is how do we mobilize funds? Yeah, in times of crisis, how do we mobilize funds? Because I think in times of crisis, actually normal deposits may not be easy to find. Normal deposits could be a challenge. So how do we get those funds? And I remember during COVID, some of us actually borrowed from DFIs. Yeah, we had the likes of IFC that came with where they called the COVID facilities. Yeah, I think in times of this, you actually have some of the DFIs that come with those facilities, and certainly as financial institutions, we should also be looking at those. But climate risk, and I remember Professor Lema also covered in his presentation. So from climate risk, I think there is opportunity to borrow significantly, particularly from impact investors. I think the sustainability bonds that we have issued, for example, Jamii bond, Kijani bond, CRDB, they all brought in significant amounts of money in the country, and mainly because, we have impact investors that, probably they are not even looking at returns. They are looking at returns, but also they are looking at the impact that they are bringing into the society, the impact that they are bringing in the world. These are called impact investors. So I think these are the things that we also should be looking at. So Cosmas, thank you very much. I think you touched on these comments very well. I think let me move to Mr. Mkama now, the capital markets. What is the role of capital markets in enhancing financial sector stability? And if you have any useful use cases, particularly from Tanzania, I think we will be thankful to hear those. If you can be strict to 5 minutes, please. Thank you.
Thank you, Lucy. I'll be strictly to 5 minutes because the issue that I wanted to talk are the one that you have already spoken about. So, capital markets facilitate sustainable long-term financing in times of crisis. And this is done in a number of ways. One is through issuance of medium-term note programs like the one that was done by NMB, where we approved a medium-term note program worth 1 trillion, and also for the one with CRDB banks, where we approved a medium-term note program worth 780 billion. This provides